If you don't tie government service to tax compliance, there is no motivation for compliance. People need to be hooked to comply. This voluntary tax compliance is 70% theory. It's 70% theory. It doesn't happen in Africa. People need to be forced. People need to be coerced into compliance.
The 27th Annual Tax Conference has come and gone. For 4 days, from Monday the 12th to Thursday the 15th of May 2025, tax administrators, tax consultants, movers and shakers of the Nigerian economy, academics, students, name it, gathered to rub minds, to exchange ideas, to learn, to teach, and to fraternize. So far, we have shared with you the opening ceremony and the presentation of the lead paper by no other person than Mr. Taiwo Oyedele, Chairman, Fiscal Policy and Tax Reform Committee. At the end of Mr. Oyedele's presentation, the audience weighed in with observations and questions, and of course, Mr. Oyedele clarified.
I want to take the next 10 minutes to invite to speak to this paper we have before us, the representative of the MD CEO, Bank of Industry, no other person than Professor Mutiu Abimbola Oyinlola, the Chief Economics and Group Head of Research, Strategy and Research Division of Bank of Industry. The next 10 minutes, he will address us, and I'll open the phone line for us to make questions.
One thing that is very clear, and which Mr. Oyedele has mentioned, has to do with the role of taxation in transforming the economy. There are a number of things he mentioned. We talked to the issue of increasing our tax GDP ratio. And it described the situation by highlighting the fact that the Nigerian situation is the 1960 Volkswagen. In the usual manner, the goal is to achieve the Tesla situation. We cannot go the way of just refurbishing the 1960 Volkswagen by changing the engine. But we must do the right thing by ensuring we grow organically our tax system towards achieving the Tesla situation. As Bank of Industry, part of what we do as the oldest and the largest development finance institution is again to commit to the transformation of the Nigeria's industrial landscape. And we do that by providing financial and advisory support to our MSMEs. And by doing so, we will see the organical transformation of these MSMEs in delivering what they are supposed to do. And by doing so, increasing the tax net that can be covered through this tax system, thereby increasing the revenue we can actually generate in the country. So we, as BOI, we are not tax collector. We are only a development catalyst. And we join hands together with other stakeholders in ensuring that businesses transform and ensuring that we have a holistic transformation of the industrial sector across various sectors. We are particularly focused on strategic sectors such as the manufacturing, the agri-business, pharmaceutical, food processing, infrastructure, and digital transformation. These are areas and critical sectors where we believe we're going to have increased job creation and industrial transformation. And we do this by focusing on 6 thematic areas. These 6 thematic areas cut across youth and skills, climate and sustainability, digital transformation and technology, gender inclusion, MSMEs itself, and infrastructure development. We believe strongly that these areas are high-impact areas where we can feel the intervention of the funding and the financial support. The conference is quite timely, more so that the progress that have been made under the leadership of the Presidential Committee on the tax reform is quite timely, and the progress is quite, moving towards the Tesla situation. So I want to congratulate the entire tax body, and also congratulate Mr. Taiwo Oyedele for the progress that has been made. We hope and pray that at the end of the day, Nigeria situation will be a Tesla situation. Thank you so much, and thank you for having me.
Let's make it better for Professor Abimbola Oyinlola. Thank you.
Now to the questions.
With regard to minimum wage, as Mr. Oyedele said, there are 1.3 million. But if you look at the National Wage Bill, National Wage Act in 2021, it says anybody earning minimum wage, which was 30,000 naira then, now it is 70,000. If we multiply that by 12, it is 840,000 naira. But you have now graduated it to 1.3 million. Does it mean that even if you are earning above minimum wage as stipulated by law, by that financial act, does it mean that that bill supersedes that minimum wage bill, or is going to be, that minimum wage is also going to be reversed? That is one. And two, we discovered that those operating haulage business, the FIRS, we said there is no input tax, and they buy equipment, buy tires, buy a lot of things which they believe is taking care in the profit and loss of their account. How are they going to claim input VAT in this new tax law?
Knowing fully well that tax is not just local, but have its international coloration. You have said a lot about local dimensions, but in Nigeria, VAT is 7.55%. But I don't know whether you consider our relationship on African Continental Free Trade Area, knowing fully well that Nigeria is charging 7.5%, while others are charging 15% and above that.
The final note from one of the online participants is saying that, like the case of incentivizing VAT through VAT refund, how can Peter be strengthened to ensure taxpayers pay their taxes, then later file and claim refund from government if they overpaid at the end of the year? If we are affording businesses benefit of doubt, they will do the right thing. Should we not do same on individual taxpayers?
Thank you. Thank you very much for those excellent questions. The first one is Minimum Wage Act says that you should not pay personal income tax on minimum wage. That law was introduced when the minimum wage was 30,000 naira, but we had previously included 30,000 naira as exempt in the Finance Act. So they were saying the same thing. Without amending the Minimum Wage Act, it means that today the minimum wage, the law says the one set nationally. So if you set something in your state, it does not apply. The national minimum wage is 70,000. It means if we did nothing on 70,000, you will not pay PAY per month. But what we have now done is to raise a threshold that is higher than minimum wage. It does not invalidate the Minimum Wage Act, because if we had set an exemption below 70,000 per month, it would have been a conflict with the Minimum Wage Act. So the two of them will go together. If federal government decides to increase minimum wage to 200,000 naira per month, what we have in the tax law will no longer be valid. It will be 200,000 naira per month that will be exempt from PAYE. So they go together, no conflicts. Your other question is, how will small businesses claim input VAT? If you are a small business, because you are exempt from charging VAT on your goods and services, you cannot claim input VAT. This is one of the areas that professionals don't even fully understand. Many professionals were complaining that we said that professional firms are not eligible as small businesses. They don't even realize that that is good for them, because it means that as a professional, one, you have the capacity to understand VAT returns. It's not difficult for you. Number two, just charge the VAT. It's not you paying it, it's your client. But you now have the opportunity to claim all your input VAT on assets, on services, even if you have inventory. Let's say you have inventory. So this is why in the tax reform bills, and also across the world, when you create a threshold of exemption for small businesses, you must also give them a provision to opt out. You see in the tax bills, a small company can say, I do not want to be a small company for the purpose of VAT. I'm opting out. Because there are instances where you do the calculation and it's not in your favor to not charge VAT. So that is how it will work. In a nutshell. The next question is that we are moving in line with the rest of the world, but how would the impact of African Continental Free Trade Area influence or be affected by the 7.5% VAT rate in Nigeria, given that other countries have around 15% or higher rates? Now, from a continental trade issue, it's not a problem, because the VAT is a local tax. Whether you bring the goods from South Africa or from Ghana, when they get to Nigeria, they will pay 7.5% if the item is taxable. The problem that it creates is possible transshipment. If something is going to be VATable in Nigeria at 7.5%, it's going to be VATable in Ghana, let's say at 15%. I think their rate is even more than that. And between Nigeria and Ghana, it's duty-free and tax-free. Instead of importing it directly to Ghana, the intended destination, you bring it to Nigeria. And then from Nigeria, transship to Ghana. That distorts the common market. Many of you will know that in our reform, we had initially proposed that VAT rate should go up gradually to 10%, 12.5%, and 15%, but our political leader said no, and we respect that. But I believe personally that this has to happen at some point. This would have been the best time, because this is the time that we have counterbalancing measures like input credit, like exemption threshold for small businesses, and so on and so forth, and zero rating of basic consumption. Constitute more than 4 in 5 consumption items will carry zero or exempt. This is the time to do the rate without people feeling the impact. Anytime we do it later, because we decided we'll still go ahead with the other reform of zero rating and input credit, there was a lot of pressure for us to reverse those other reforms, but we don't have the opportunity to relax any reform that we can do now. So we decided to go ahead. So that is the impact, the way I see it. The last one is, how can taxpayers, individual taxpayers, file returns, claim refund at the end of the year, similar to businesses? The reform also has a big focus on personal income tax. From the personal income tax perspective, We are working with the Joint Tax Board and with the Internal Revenue Services of all the states. And we are hopeful and we believe that they're also willing to make the system work. Once you have the right intelligence to know who is paying taxes and who is not paying, when there is an overpayment, you'll be more willing to refund it. But because many of the tax officers and tax revenue services, particularly at the subnational, are just there in the dark, hoping that they find someone to pay tax. So more often than not, when there's a refund, they're reluctant. And the system also works in a way that any tax you pay, whether it's an overpayment or not, is shared and spent. By the time you come back and say you have a refund, there's no money to give you refund. So all of those issues have now been addressed in the reform, but I would acknowledge and agree that that is just the first step, setting the legal framework. Making it work is now down to me, down to you as taxpayers, as tax officers, to be willing and deliberate in making the system work. Let's get to a point in Nigeria where we build trust between taxpayer and the tax authorities and government, such that in some countries, like the Nordic countries, when you have extra money, you just pay it as tax. Because you know at the end of the year, government will not only return the money, they tend to give you interest on it. Whereas in Nigeria, when you have tax to pay, I once went to Lagos Business School to deliver a lecture. And when I finished, one gentleman came to me. He owns a business. He had worked and lived in the UK, relocated to Nigeria to run a business, and he came with his UK mentality. Review all the taxes, pay all the taxes. He was paying taxes correctly, 100%. The first tax audit they conducted on this man, the tax officers refused to go. They said, how can you not have additional tax to pay? So they stressed the living daylight out of this man. After he settled the liability he was not owing, just to let them go, he went and told his CFO, he said, from now on, when you finish calculating taxes, pay 75% and keep 25%. I said, sir, don't you know you pay penalty and interest? He said he doesn't care, so that when the tax people come, they can find something and let him be in peace. We were damaging the tax system, and that needs to be addressed. So we are hopeful that these reforms will move us in the right direction. So thank you very much once again.
On the same day, the second lead paper on tax reforms and expectations of subnational was delivered by His Excellency Mr. Lucky Ayedatiwa, Executive Governor of Ondo State.
Taxation, everyone knows, is a fundamental tool for financing development. But the role for subnational governments in tax reforms is often overlooked. As Nigeria continues to face fiscal challenges, it's crucial to understand how tax reforms can empower states and local governments. Let's explore how tax reforms can better align with subnational fiscal needs and aspirations. So let me introduce the paper presenter, His Excellency Governor Lucky Ayedatiwa, Executive Governor of Ondo State. A round of applause for him, please. That's the paper presenter. Thank you.
My own area that I want to dwell on is House of Nationals, our rules and our how we can support, how we can align with the policies. You know, we run a federal system where we have the federal government at the center, and the state, the subnational, if you like, at the state level. Even we have the authority of the local government under the states. As the federal government takes the lead in policy formulation, even though the policy will not be completed without the input from the state, taking the lead in terms of the law, the actual implementation happens at the state, or if you like, the grassroots level, because we at the state, we are closer to the people, to the grassroots, than the federal government. So let me open this discussion or this paper presentation by making this quote from Inter-American Development Bank. And I quote, taxation is more than revenue. It is a tool for development, unquote. Taxation is more than revenue. It is a tool for development, which is in line with the theme of this conference. You will all agree with me that taxation remains a cornerstone of modern governance and national development. It is the most reliable, non-debt source of revenue for government globally. This presentation therefore seeks to explore these reforms and articulate the expectations of the subnational government, which I am representing here today as governor of Ondo State, one of the subnational government.
So what are the benefits that the states and local governments expect from the current tax reform exercise?
So what we expect thereafter is increased allocation from what have been passed in the bill. There will be increased allocation to states through a fairer VAT sharing formula, which you all know, 50% derivation, 35% for population, and 15% for equality of state. And we also know that this bill also talks about zero VAT on essential commodities like food, healthcare, education, so that the household can have more money to spend. Just as I was asked outside there, what are the anticipated outcome of this conference? And I was telling them that the anticipated outcome will be the outcome of this reform at the end of the day, which will include improved public trust and tax morale. People will be willing to pay their taxes if we deploy accurately as planned, because by the time you free up household income in some areas, food, healthcare, education, and you don't collect VAT on those ones, they'll be willing to pay taxes in the other area. And they will also, that will build public trust among the people. Higher IGR performance without raising tax rates, since focus will be on collection. Having more people into tax net without increasing the amount to be collected, but more people, particularly at the grassroots level, where the income to be taxed are being generated. Enhanced service delivery at the grassroots and better investment climate. These are some of the outcomes that I've been able to put together that by the time we implement this new tax regime. The tax reform bills and its impact, like I said, you are all tax advisors and administrators. It will reduce corporate income tax rate from 30 to 25 for the first, over 2 years. New progressive personal income tax introduced. That is the first 800,000 is tax-free. If you are earning less than, I almost say that you are even making minimum wage tax-free by this figure. That means the people will have more money to spend on other items.
In discussing Governor Ayedatiwa's paper, tax administrators from some of the states shared their experiences.
So I think we should just go straight to the discussion. Let me start from Akwa Ibom State. I know Akwa Ibom is an oil-rich state, and of course, just like Ondo too. So let me ask you clearly, what reforms are you undertaking as a state non-revenue? What are you doing to improve revenue generation in your state?
A major
measures of reforms have taken place in Akwa Ibom in terms of technology, adoption, in terms of data, in terms of reorganization of the workforce, in terms of the relationship with other tax revenue collecting agencies, MDS, by way of collaboration, and a lot of also been done in terms of reorganizing the field work, so that we can have a seamless, walkthrough the whole, gamut of tax potentials in Akwa Ibom State. So that has helped us tremendously. We also check out the performance in the past number of years. You see a steady upward trend. These are the results of the transformations and reforms that we have embarked on in Akwa Ibom State.
All right, let me go to Plateau, which we know that largely agrarian and informal. And what are you also doing, especially as to generate more, and how are you impacting the people?
All right, so thank you very much. Very apt question. So for us at Plateau State, what we started doing is to standardize our processes. So the first thing is that we have to start even from creating job schedules for our staff so that they know exactly what they are supposed to do. Now, you rightly said, Plateau State is an agrarian state, but there's one part of Plateau that people never put into consideration is we have a lot of deposits of mineral resources. Yeah. So when I realized that we had huge potential deposits of mineral resources, and we have a lot of inflow of foreigners, Chinese nations into Jos, coming to wine, tin, columbine, lithium, and they will leave. And there was nothing to show for the state. So the first thing we did is that presently we have banned even illegal mining on the state. The other things we did is that even what we are supposed to get from royalty from the federation, it doesn't come to us. So they take the minerals, take it at the export point, they register it from that particular place they're exporting, as if it was wine or it's a mine from that place, and take it out. So what we do is that we track the financial inflow. So we realize that every month on an average we have about $10 to $15 million inflow in terms of mining alone. So that taxation is something very critical, that there's a contribution that we call it 20-80 rules in taxation. 20% of your population will give you 80% of your income, while 80% of your population will only give you 20. So we start hitting on the high network individuals. Then we have blocked all leakages because we have to be like Lagos. Now, why do I say we have to be like Lagos? We have to have a platform whereby we have to create a modality that there is no more leakage. People come through a single billing system where we make sure that there's no cash collection. Unlike before when I came, there was a lot of cash collection everywhere. And that has shown that has shown us a bit of growth that we moved from 800 million to 3 billion. Right now we're doing slightly above 3 billion, but there's potential that we can do far beyond that if we can tap into the high network. Now, one of the things that I think for me personally from the subnational point of view from Plateau is that I believe the new tax reform will solve 90% of our problem. Now, why do I say so? Now, we have what we call multi-taxation in the state. Now, you discover, and we also have jurisdiction problem. Then aside jurisdiction problem, we also have that these things are not clearly stated. So if you have looked at the 4 tax reform, 2 are very important to us. Like for the fact that tax administrative bill was one thing that will standardize all the practice across subnationals. But my concern is that how much are the local government getting ready to key into this? Because one of the problems we're having in the state is the local government infiltrated, and most of the people there are very unprofessional. Now, even at the state level, so the best thing that the local government did in the state is that, okay, we know we cannot do it. The Internal Revenue Service, can you come and collect the taxes on our behalf? But do you know that as we are collecting, they are collecting? So there are a lot of issues happening there. But the truth is, in the state, we try not to tax. Let's not tax the seeds, like Mr. Tai will always say, we tax the profit. So most of the times, they think we are not going after them, but we are going for the wealth they created. But however, there is a lot to be done, even in terms of the property tax. We have never tested the property tax. So when I started the property tax in the state, so the first thing we did is that, okay, let's tax only the commercial properties. But my brother, if you see the kind of issues I'm facing, but thankfully and thank God, the new tax law will solve that problem because it's bringing the property tax into be under land use charge. And that, I think that's one of the areas Lagos are far ahead of most of the states, most of the subnationals in Nigeria.
Well, let me talk to Mr. Adeshekon. Mr. Olusegun Adeshekon. I said with the ongoing fiscal federalism debates and all of that, now should states be granted more autonomy in tax policy design, or should we just stay with the JTB, standards already on ground?
I will answer it from 2-3 dimensions. Where we are today, or where we are today, 2 dimensions, and where we're going. Now, currently, about almost all the states in Nigeria have passed what they call the revenue administration laws. A major provision in those laws is the independence and autonomy of the revenue authorities in those states. But unfortunately, out of all that have passed, Enugu is the last one. Enugu joined us about 2 months ago. So out of all that have passed, only 12 actually implement full autonomy, 5 partial, and 20 don't have any autonomy at all. And with the data available to us, the states that are implementing and practicing full autonomy are doing way better, including on those states, than those with partial or no autonomy. Now, the constitution is clear. The federal has been the exclusive legislative taxation matters, the federal. Now, by virtue of the current law, the status quo, the Personal Income Tax Act, they've created the state revenue authorities, and they are expected to function as autonomous revenue authorities. It's not the business of the federal government to force autonomy on the revenue authority at the state. It is the states, the governments are the subnational, the political leadership that should ensure so that when you have an autonomous revenue authority, can do much more better. Now, if you look at the JTB, it's actually a voluntary body of all the tax authorities in Nigeria. It's not a forced arrangement. It has the Federal Internal Revenue Service and the 37 subnational coming together so they can have common ground on tax matters, particularly personal income tax matters. That's the current arrangement. Now, with the tax reforms, the JTB is having its mandates being expanded to intervene on all tax matters. And what that means is subnationals will have more say in tax law and policy. First of all, our first mandate under the impending GRB law will be to integrate and maintain a database of tax identification numbers, team of every taxable person in Nigeria in collaboration with the Federal Internal Revenue Service, the Subnational Revenue Authority, and revenue authorities, and other government agencies. That alone brings us together to collaborate. Secondly, one other mandate we have is now subnationals will have a say when the country is engaging in double taxation arrangements with other countries. The status quo now, when Nigeria wants to, sign the double taxation treaty with another country, the status quo now is that the JTB can only be involved if our advice is sought. I'm sure our advice has never been sought on this because it impacts on personal income tax. But now we are part of that conversation, which means subnationals will have a say in that conversation. Now, the JTB also will advise federal and state government on new taxes and changes to existing ones. I can go on and on and on. We have a mandate now or going forward to maintain a platform for integration and also ensure uniformity revenue administration, on and on. So the platform JTB, which will become GRB, will be stronger. The states and federal will come together. They will exhibit their autonomy, respecting their autonomies, but come together to have common ground on tax issues. Thank you very much.
Yes, Dr. Namani. A lot of good news around the IGR from your state. So, 2-in-1 questions. What are you doing? What are the reforms? I know Enugu is business friendly with what your governor's been doing lately. But how can tax reforms be designed specifically to strengthen subnational autonomy and enhance IGR for your state in focus now?
Thank you. Let me start by telling you what we implemented in the last 18 months. Our last 20 months of our being in office in Enugu State Internal Revenue Service. When we came into the service, we discovered that the service was generating, or the entire state was generating 2.3 billion naira a month. And these were not enough to pay the salary These were not enough to pay the overhead. They were not enough to give subvention to tertiary institutions like the university, the polytechnic, the college of education. And when governor appointed me, he said, Emma, I don't know how we are going to do it, but Accountant General, don't touch my FAC, don't touch my VAT, don't touch anything that is allocation. If Emma does not generate this money, we will not pay salary. So because of that, I said, okay, we went into action. What we did was, we had only one gateway in the state, which was InterSwitch. I said, okay, does it mean when InterSwitch is not up, the entire revenue collection of the state will be down? We decided to open it up. We brought in Remita, brought in eTransact, brought in Flutterwaves, brought in Money Point. I said, come and collect for us, in as much as you will be able to give us real-time notification to the central management portal. And they started collecting. Some of them started giving us advices on the best way to collect this revenue. And the revenue started jumping. In January, we made 14 billion as a state in internal generated revenue. February, we made 12.9 billion. So you can imagine the trend. But it's not just there. We ventured into what we call the informal sector, where everybody dare not to enter there because you are going to receive a lot of fight. So we entered the informal sector. And you know that as an Igbo man, the informal sector constitutes more than 70% of our economy. So we entered there, but how did we enter there? We said we are going to consolidate all the revenue collection in the informal sector. Whether it is tax, we are going to use presumptive tax model. Whether it's business premise, whether it is environmental, whether it's sanitation fee, we pulled all of them together and made it to be one collection. And we use a technology called e-ticket to administer it. When we started, every advice is, Emma, don't go there, you can't make it. Don't go there, you will not make it. But to me, I said, why do we have too many associations in the informal sector? There's money there. So now I can assure you that what everybody advised me not to enter, the state can conveniently raise 1 billion naira a month in the informal sector taxation. The taxation from the KK people, from the market people, we raise 1 billion naira a month. This has actually helped in where we are going. And like my governor used to say, we have not been able to scratch the potentials we have. But again, I also want to let you know, we also tapped into an area that had never been touched in our time. And that area is, you know, in Igbo man, if you don't have a house, you have not started in life. So our people believe in real estate investments, building houses. And we said, okay, these houses that are in the state, the owners of these houses collecting rent, do they pay any tax? The answer is no. So we have to pioneer what we call personal income tax on rental income. And you can't believe it. We are raising an average of 2 million naira on daily basis from this income line. These are just areas we are moving into. And the potentials are there. Massive potentials we have not been able to tap. So these are the little we have done. And again, to institute that particular thing, our governor, being a businessman, followed up with infrastructure that is unlike in the entire of Africa. You see, we have 260 wards in our state. Every single ward is witnessing unprecedented development. We are building smart green school in the entire 260. It's not that we are building it in paper. You need to see it yourself. We are building type 2 hospital in every of the 260 wards. And it's practical. This is not just, we have a mandate to construct 10,000 kilometers of road within 8 years. So when we award contract for road, we award 200 roads at a time. And all of them start simultaneously. So every stage you are seeing it. We have the best command and control center. If you want to try any shit in Enugu, try it, we'll catch you immediately because we have security. We stopped IPOP, sit at home on Mondays. It was deliberate. And the Monday we used to generate zero revenue, we can close our eyes and generate 150 to 200 million naira every Monday because we stopped sit at home. So these are things we have done in the state that we are proud of, even though we have not been able to meet governor's expectation, but I don't think we'll be able to meet his expectation. We'll just continue to move on and do our best.
Back to Governor Yedatiwa.
Your Excellency, brilliant presentation like everyone has attested to. But my question to you really would be, how are you trying to navigate the tension between the urgency to grow revenue in your state and the imperative of not overburdening citizens with taxes? How are you trying to balance that end?
The design of any tax regime is very, very important. When you make it simple, adaptable, and make the payment system also very, very easy, and then create awareness down to the grassroots, then you don't need to increase the amount being taxed. You only need more people to pay tax. You made the system simple as it can be, because from filing, payment, and the system itself, the system is very important, because, and also you need to let the people know what you are doing with their money, because taxpayers' money, they say. When you let them know what you are doing with the money, they can see it, then they will be more willing and obedient also to pay, especially when you make it simple and you create a system that make it easy for them to pay their tax. Just like what we are doing right now. We have not actually increased the percentage, but we are bringing more people into the tax, because a lot of people have always been outside the tax net, the informal sector, all of these people. But once you create that platform, you know, and then you block leakages that has been before. And those are some of the things we are doing. We have, you know, roll out technology, and then, you know, collaborate with the private partners who is also helping us to drive all of this without basically burdening the people in terms of the amount. But we have more of them painted. That has been helping us in the state. All right, brilliant. Thank you so much, Your Excellency.
Still unexpected outcomes from the tax reform exercise.
Sir Okod, how can the collaboration between now FIRS and the state's Inland Revenue Services, how can it be improved? Are there challenges? How can we strengthen ties between both segments?
Yeah, thank you very much. You know, presently, between the State Revenue Service and FIRS, there have been some measure of collaborations. Like His Excellency, this in terms of audit. You know, we do joint audit. We also share information. You know, under the reforms, post-reforms, we expect a lot more of this, because we expect that the reforms will bring about shared database that will be warehoused in the Joint Tax Board. And if I is a member of the Joint Tax Board, they share it. You know, so, and all the states, the subnationals are members of the Joint Tax Board. So we're going to share from that same data source, and then also exchange from the states to FIRS as the need arises. We will continue to go on, you know, joint audits on need basis, so that we can benefit from information from, you know, taxpayers that are in the net of the FIRS, which may not be in the net of the subnationals. Additionally, you know, we expect that after the reforms, there will be some uniformity in technology, which we are going to derive benefit from the state. And FIRS being the big brother should also play a big role in that, you know, creation of that, you know, big technology platform. It's envisaged that, especially when it comes to some taxes like VAT, you know, like VAT, which now going to come under a new formula, a new attribution formula. You know, where states will be able to get more based on the derivation. You know, the states would do a bit more, would gain a lot more from VAT. The state is going to gain a lot more from stamp duty. I would move from FIRS collecting. If I'm quoting my the chairman, the stamp duties will now move to the states. Currently, FIRS will not cover anything in that regard, but again, the states will gain more. So between FIRS, Joint Tax Board, and the subnationals, we are like one body. You know, we are also thinking that sometime in the future of this country, you know, maybe in the medium term, we should have all the tax authorities come together as one, as practiced in some other climes in the world, where you can have one big tax authority, collecting on behalf of all the federation tax authorities, and then we can use the right formula to do the sharing. So collaboration between FIRS and subnationals will continue to receive a lot of encouragement mutually, so that we can benefit from that relationship.
Now let me ask Dr. Adeshoko before I come back to Plateau State. Now my question would be the ongoing tax reforms, which he highlighted and many have highlighted on it today. Do you think, or how can it help align the misalignment between national tax policies and the fiscal aspirations of subnational governments?
Part of the innovations, the reforms we bring about will be a national tax policy. For the first time, we are designing this policy. It's not just going to be called a tax policy, it's going to be called a national tax spending and borrowing policy. It's still in the works, but it's going to create an alignment between the federal government and the subnationals in tax collection. It's going to create alignment on how we spend revenue. It's going to create alignment on how we even borrow and how we expend our debts. Secondly, is the fact that if you look at some areas of jurisdictional disputes, the bills actually resolve this. My brother, the chairman of Akwa Ibom State General Revenue, has talked about the controversy surrounding EMTL stamp duties. Now, the new bill lays that to rest. EMTL is now stamp duties clearly. If you go further to fiscal aspiration, let's look at VAT. First of all, the revenue share now gives states more money. States will now have 55%. Federal is going down from 15 to 10%. Another way of meeting the fiscal aspiration of states. Now, the 55% going to the states, if the makeup, 30% will now be consumption, is coming from 20 to 30%, more resources to the states. And states should also take advantage of this. Consumption is 30%. If you create more economic activities, just as the governor of Oyo State has stated here, look at all the projects they're embarking on, the dualization of the Dore Road, opening up the coastline. When you have more economic activities, it will translate to more consumption, more VAT accruals. So the reforms definitely is going to align federal and state subnational, and the fiscal aspirations of national will also be met. So nationals will also have a duty to step up to. Thank you very much.
So let me ask you this about voluntary tax compliance. And many talk about it. How can tax reforms promote voluntary compliance and build trust in tax system with subnationals?
Okay, so thank you very much. So one of the things that the new tax reform is trying to bring onto bear is the fact that it's digitalizing the entire tax process. And not only that it's digitalizing the entire tax process, there is unification in our activities even across the subnationals. Now, what do I mean? The tax reform has a bill that talks about how we are going to administer, even from all the subnationals, including the federal. Yeah. So what literally means is that the process of your registration is the same with Lagos, the process of registration is the same in Kano, the process of enforcement, so all those processes are the same. Now, also, you see, there's one problem that we always have, the issue of database and identity. Now, Nigeria have an identity problem. So one of the things the tax reform bill have introduced for us to bear is the fact that now we are going to use your NIN as your identity. So NIN is one, you can't get more than one NIN. Then again, for the companies here, your RC number or the business number. So this gives us identity. Then again, there's a clock whereby we shall share ideas. The only problem I still feel that we are yet to articulate at the tax bill, the truth is the best way to know the law is when you put into practice, is the fact that how can we going to, because every state has its own application or single payment platform, so how do we all integrate into one? Are we saying a Big Daddy, the National Revenue Service now, FRS, before the enactment, will now create a platform for us to do this? Or all of us, we're now 37. The 37, are we going to share APIs across each other? Then how robust is every state's API? No, but the good thing is that for the first time, we're seeing technology into practice in taxation. For the first time, we're seeing the taxing of the digital economy. This is one part that I tried my best to do. Right to Google to send me to this, right to Meta. So there had never been a clear cut. Then a good thing is that there's one part of the bill that I love so much is the fact that even this betting that bring them now back to the tax net. So we're bringing the law into the tax net so that there will be withholding tax, so advanced payment is going to happen. Then how can that build trust? Now you see, if technology drives a process, naturally it wither out leakages. Then if wither out leakages, it means more revenue to the state. If there are more revenue to the subnationals, there is no governor in Nigeria, mark my word, that will have more revenue at his disposal than he won't do critical infrastructure. All of them have the same thing. And the thing is, like Judge Ware once rightly said, that you must not be, even if you are a blind man, you must not know that the people need roads, they need healthcare, they need, so these are things that all governors have faced. But the truth is, there is no money enough to even cater for these things. So one of the things I also believe the tax reform will do is also create trust in governance. Because the processes have also allowed, there is now what we call transparency in the process, not only about the transparency that you can literally see what every state is doing. So the people now can ask, because the law says that there's also part for engagement, citizenship engagement. The people can ask critical questions. We've generated this, what have you done with it? And things like that. So by and large, it's a welcome idea for all of us at the subnationals, even at the center, that we are going to put this tax law into test, and wherever there are loopholes, because even them that prepare the tax law still discover that at the debate end, there are a lot of issues that we have seen. Even me personally, there are some things I say, when they were doing, didn't they think about this? But again, it's already at our floor. We are waiting for His Excellency, the President, to sign into law. Then let's see how we are going to play around it. Thank you very much.
Dr. Namari, just one more question for you and parting shot from Your Excellency. So how are you also collaborating with local governments now, particularly to avoid duplication? With these positives you reeled out, how are you doing that?
Okay, thank you. I will answer this question, but permit me to say some certain things. You know, in this tax reform bill, we have all had hope that is going to translate into massive revenue growth for states. We just have to be very careful so that we don't hype it and state governors will begin to undertake projects that may remain unfunded. I want to tell you one thing. In the states, I want to state typically a state IRS. State IRS is a typical civil servant. There is no basic training. Technology acquisition is not there. When it is acquired, it's not retained. A new governor comes, doesn't like your face as technology provider. He changes the technology provider. The entire data is lost. Then we come to technicality, IT. How many of the state internal revenue service staff that has this kind of IT that we need to be able to drive this revenue up? We have given massive exemption for PIT, which we cannot reverse for now because the law is already passed, awaiting assent. But I have a question there. The question I've always asked my Oga is, why is it that we are giving tax exemption? Because we say people are poor, and we allow them to pay union dues. Which one is more prioritized to a nation? Is it paying union dues or paying tax, no matter how token it is? Again, I also want to ask another question. Why do we exempt companies tax based on revenue? Why can't we say any company that made a profit to pay tax based on its profit? And if it has made a loss, let him not pay at all. Why are we basing it on revenue instead of profitability? But that notwithstanding, for us to move ahead in this country, because the law is already passed, we demand one thing. One is, we want the restoration of TCC in the tax law. We want it to be restored. Without tax grant certificate, there is nothing that will bring people to come and request for tax payment, especially the HNI. The HNI you want to go and tax, they are the one that supported the governor in terms of funding. If you push them too much, they will override you and call the governor directly. And the governor will have to tell you, can you pay that down? Stop it. Hold on. And that will also dampen the revenue of the state. Yes. Again, in terms of technology, the data we talk about, how many of us have this data? How many of the states can claim to have data of companies registered in his state from what we call the Corporate Affairs Commission? Do we have access to it without requesting and going on and on and on? Can we have access to customs? How many of our state resident imported goods from customs? Is it available? Or when we demand for it, we go on and on and on and on. If these things are not there easily, states should not go and rejoice. It's not all hulus. We have to work. Another thing I want to say again is that in that data we are talking about, how can we bring FIRS to ensure that when you are filing for company income tax, you must show evidence of compliance with payee? Because we discovered that thousands of companies file for FIRS, but they don't file with the state. How do we bridge it? How do we make sure that when you are filing to FIRS, you must show evidence of compliance to payee? This will increase the tax net. Again, when implementing this tax law, I want the chairman, who is the father of new modern taxation, to do what we call implementation guideline that we go viral across the state. Implementation guideline. It has to be line by line implementation guideline. There has to be engagement. The IRS chairman has to be properly trained, and other what we call the change agent has to be trained across the state for this to be internalized. With this, I also want to appeal to them to ensure that every single government service is tied to tax compliance. If you don't tie government service to tax compliance, there is no motivation for compliance. People need to be hooked to comply. This voluntary tax compliance is 70% theory. It's 70% theory. It doesn't happen in Africa. People need to be forced. People need to be coerced into compliance.
All right, thank you so much, Dr. Damani. Now, Your Excellency, as we wrap this up, I'd just like to ask you if you believe maybe governors should have greater latitude in designing state-specific laws, tax regimes, to reflect their maybe unique economic realities.
Thank you, Mr. Moderator. Let me say that there is no system that is perfect, first of all. And society also is not static. There's evolution. That is why we are doing the reform that we are doing currently, because the evolution, of society, brings up new realities, yearnings and aspirations and all that. So we'll continue. There is a regime we're running before now, and there's this new reform. I want us to embrace this new reform and operate it, and also see areas where there are defects or deficiencies, just like my brother is mentioning some areas, and begin to look at what input we need to bring in, so that, because we can only get near perfect, nothing is perfect. We will continue to engage the system. If there are loopholes, we try to work around it. That is my belief, and that is the only way we can go. And let me also say this, that transparency is very important in everything we are doing, especially when it comes to this. But unfortunately, most of the time, we don't get 100% transparency. But it's only transparency that can actually make the people to be willing. And if we talk about collection of taxes, it's compliance that can increase, collection. It's as simple as that. But it's only when there is no compliance, then enforcement has to come in. So I want to also live with the people, with the new reform. Let us embrace it. Let's work with it. If you have issues, especially where there are windows for tax refund and all of that, you know, as we operate, and let's begin to see areas that we need to make additional changes and reform. It's a continuous engagement. Thank you very much.
Some of the concerns raised by Dr. Nnamani were addressed by Mr. Olusegun Adeshokun, Secretary of the Joint Tax Board.
Permit to just respond to the comments made by observations of and the questions. Number one, TCC requirement will be in the law. You can go to bed, please. Number two, the NTAB makes clear provisions for so many things. All your fears are taken care of. Number one, let me give you number one. Every financial institution in Nigeria, bank, stockbroking firm, insurance company, whatever you are doing that's finance related, even those in digital assets, virtual asset service providers, must render returns. Are you with me? Render returns to relevant tax authority. Not just that, clear minutest detail of those involved in those transactions of 25 million and above. On a monthly basis, you organize it, you send out quarterly, and then it's even in the law. Banks must integrate software, so they will be sending you documents for automatic transmission of this data. And we are providing a platform. Secondly, on HNIs, currently, we are resourcing our subnational revenue authorities to manage HNIs. Just this, a few hours ago, I came in, the Zamfara State Chairman just gave a testimonial. By virtue of that resource, a taxpayer in their state who was under presumptive tax regime, they just discovered he makes 500 million turnover every week. So key into that resource is available, I can assure you. And by the time we now go to GRB, it's going to be bigger and better. Customs, we've said it, we have integrated with customs. They are rebuilding their platform currently. When they are done, you will have access to it. Seeing we are harmonizing with the FRS and NIMC, implementation is about to start. Just relax.
And from the floor.
In all of this, we have seen that there is hope, but I am thinking that we should also focus our eyes on where the bigger money is, the crude of the future, which is technology, ICT, digital economy. All of these reforms, we have not totally, looked deeply into how subnationals will benefit from people who have digital assets, people who are earning so much from the digital transactions, so much economic activities are going on the digital platform. Let me quickly give an example. Right now, we have, through the Financial Act of 2020 as amended, taking care of significant economic presence of companies, and they are paying to Nigeria. Last year, Google paid about 1.3 trillion. But what about the aspect of those who are earning from Google, Metal, and so many other platforms like that? How do we now take revenue from those people?
Right.
We are getting revenue from Google now, based on its withholding tax and all of that thing. But what are people earning from Google? So the legal aspect and other legal infrastructure should also be, looked into around that area.
Look, currently, all those companies you mentioned, Google, YouTube, and Co, will not talk to subnational revenue authorities. They will only speak to FRS, which is our sovereign national tax authority, by virtue of the fact that FRS is a member of other international organizations. So information is exchanged at that level. In the new tax law, whether FRS likes it or not, they must exchange information with us. It is a law. And the word is shall.
the operating word there is shall, number one. Number two, if you look at one of the bills, it clearly states you are here, you are earning income wherever, digitally, you must file your returns. If you don't file your returns, we will get your information from the banks. If you don't file your returns, we will get your information from the virtual asset service providers. It is in the law, they must provide this information, and there will be integration for automatic transmission of this. And as a virtual asset service provider, you must register with SEC. SEC regulates you. In the law, there are punishments if you don't give us details of transactions you have handled. You can lose your license. There are punitive fines you will pay, even banks and other financial institutions. So calm down.
Thank you. Let me start with Mr. Olusegun Philip Adeshokon. Thank you so much, Executive Secretary, Joint Tax Board. I have Dr. Jim Pamwires. Thank you so much, Chairman, Plateau State Internal Revenue Service. Sir Okonoko, thank you so much, Executive Chairman, Akwa Ibom State Internal Revenue Service, and Dr. Emmanuel Ekene Namani, Executive Chairman, Enugu State Internal Revenue, and His Excellency, the Governor of Ondo State, the Sunshine State. Thank you so much for your time. Thank you so much. We appreciate this. So that's it on this session.
Let me say thank you very much to Tolulokpe Ogunjobi, the business editor, my brother, my friend. Can we put the hands together for them? This session has been well loaded.
It is still the story of the 27th Annual Tax Conference. Do well to like, subscribe and follow us on our social media handles because there is more to come.